Welcome to another episode of Lightspeed Investing Podcast. I'm so glad to have Anthony back at it again. He is the CEO of Deliver Capital, talking to us about all things related to your personal credit, business credit, in order to maximize bank approvals on your business funding. Today, we're going to talk about specifically how to organize your financial statements in a way that will make every bank swipe right to any amount of money that you ask for. Anthony, what an exciting topic, man. Glad to have you here.
Yeah, appreciate it, my friend. I'm glad to be here on it again.
Yeah, so how are we gonna get banks to swipe right? I mean, I know, getting girls to swipe right is the norm, but getting banks to swipe right is something that is new to
Yeah,
hear.
you can call me the banking Tinder of financials and loans.
Yeah, well, let's get into it, man. So what are the components that we need to watch for?
Well, I think if you understand what your current financial picture is, right, the strength of your financials and playing your strengths versus your weaknesses. I think I mentioned to you before, if looking at number one, the foundation of everything is your personal credit, and the strength of that personal credit can really open up a lot of different doors. And if you don't have financials, that's okay. You can start off with some startup capital, 0% business credit cards, from there. But when you really have some cash flow flowing through your bank accounts, your business bank account specifically, or if you're seasoned, you have business tax returns as well. And I'm going to get into a little bit of that, the structure of the business tax, what these banks look for. That could really help you understand, okay, well, based upon my strengths of, hey, do I have 3 months of business bank statements to tap into? Is it just my credit with stated income, right? We're projecting our income and what we're putting in the application for the approvals. And so looking at tax returns, bank statements, which is current cash flow, or just credit based, applications, looking at all of those can help us dictate what's the path and the sequence of these banks that I want to work with to get approvals left and right from the application process.
Okay. So I guess, the components, right? Can you break it down in like an organized way, right? In terms of how to, really set yourself up so that, you could basically ask for any amount and get approved.
Sure. So let me just lately, because we have 500 banks that we work with, and a lot of these banks, they work with certain programs that let me just actually back up. We're afraid to work with these big banks because they say, the stereotype of how working with the big banks is a big headache. They ask for so much information, which is 2 years of business tax returns, 2 years of personal tax returns, current financials, everything on this checklist that just makes it very scary that you have to be organized in order for a bank to say, yes, I'm going to give you a 50, 100, 200, $500,000 loan. So I always say, look, know 2 years ahead of the road what you want to do, right? If you're cash flowing and you are really, generating a lot of capital in a lot of revenue in your business, and you want to, not pay enough taxes, then yeah, your CPA is going to go and write everything off. You pay a very little amount of taxes because you're not showing a lot of income. Cool, right? CPA is like, we win. That's not good for the banks, right? And so there's a certain formula of where you can still have a lot of revenue and show enough net profits, which is what these banks look for, which is called cash flow, and still pay little amounts of taxes, but still get approved with your returns, right? If you're going that route. So if you are wanting to scale and grow your company, you need the bank's money, then I would want you to really look at that formula that I just mentioned to you, right? If you don't need the money, then yes, write everything off, pay a little taxes from that. But if you pay a little bit of taxes, roundabout, let's just say a 12.5% net margin, right? Net profit margin that you need to show. That's after your debts and your income from your thing. You can roll back your interest and depreciation, not to get into the weeds of actual underwriting. But if you understand that formula, then the banks can actually tap into your tax returns. They'll give you about 10% of your annual gross sales. So for an example, if I made $1 million in revenue in my business, then the banks will say potentially give you about 10%, which is a $100,000 business line of credit, loan, etc. Right? And then they're going to ask you the question, okay, well, can you afford this new loan? What your current your debt coverage is, your current net income, and looking at that formula, say, can you afford this new loan portion of it, right? So that really helps us structure the types of loans, and then we take you from 1, 2, 3, 4 different banks, and we'll get you 3 to 4, 500,000 based upon that formula, playing on your strengths from that angle. But let's just say that, hey, my CPA messed up and wrote everything off. I'm not showing a lot of net profits from my last 2 years of my tax returns. Or let's just say that you didn't have such a great a couple of years, but you're currently crushing it, and now your bank statements are looking really strong. So a lot of these banks don't really publicize this, but they have secret programs that, hey, we just need 3 months of business bank statements, light doc programs. They're streamlined. We'll give you an approval within 24 to 72 hours, and we just provide me your current cash flow, just 3 months of business bank statements, and same formula, right? They'll annualize your deposits, which is your annual gross sales, give you that $100,000 business line of credit, unsecured. And all you're doing is providing 3 months of business bank statements. So by having enough net profits with the deposits, which is your gross revenue, and then they're going to look at your bank statements and saying with deposits and withdrawals, just like anything else. They're not going to ask for profit and loss, balance sheet, tax returns, personal tax returns, all that crazy stuff that we don't have time to really put together, for us there. So that was part of my whole aha moment when I started, in this business, is I was calling every single bank, talking to bankers and asking them what their rules are. Hey, do you have any secret programs like this? And you'd be very surprised that a lot of them do. So now that's what made us really emphasize on doing the bank research and knowing the rules of the game before you play, right? And if I know, hey, Philip, your profile looks like this, these are the banks that are going to be the best to apply with to give you the probability of success from that.
So does it matter what tier of banks we're talking about? Like, is it only restricted and limited to certain institutional I guess size for banks that have secret programs, or can you find it across all spectrums?
No, we work with, for an example, with all the major ones, right? The Wells Fargos, Bank of Americas, and the Chases of the world. Then you want to go down to your regional banks, community banks, credit unions, like your Regions or your Truists, your Citizens banks, right? These are all, regional banks, which they all have, these programs. PNC, right? A great bank, as well. And so, of course, it's their money, their rules, but the formula, I would say, is at least 80% of the formula is really the same. Right, from how they underwrite and review. Yes, that bank may pull Experian, that bank may pull TransUnion. They may look at this business credit bureau for the business side, but in the very end, the formula for getting approved is pretty universal.
And can you from a high level overview remind and inform the audience what that universal formula looks like?
Yeah. So what I was teach the 4 pillars. Right. Strength of your personal credits. Looking at how many revolving accounts, unsecured debt, secured debt you have, your credit score is a major factor. It's not just about the score, it's about what's behind it as well, right? So it's kind of like your credit report is like your resume, right? They want to look at the strength of that. Then you would say how your company's set up, right? Are you in a high risk industry, low risk industry? Are you professional, right? Do you have a professional address, email, domain, number? You're not using your home address or your cell phone. That's the corporate compliance aspect. Your business credits, which we spoke about, also the strength of that can help give you more 2-3 times more amount of money on your approvals and your experience of handling business lines, loans, equipment loans, etc. And the last piece over here is your financials. Okay, and so there's one of my banks, for an example, that you bank with them even as a startup. You bank with them for 3 months. If you do about 25,000 just in deposits, they'll give you 100,000 business line of credits.
There you go. So it's like these little nuances.
3 months in business,
right?
And you have access to 100,000 from a community bank, I believe it is. Yes, I think it's a regional or community bank, right? None of these these main, Bank of America's, right? You don't even know who they are. It's a little small bank in California.
Right.
And that's a game changer, right? You're starting out your company and you're in California and you bank with them and you have some kind of revenue flowing through, not even your cash flow from that. So these, again, their banks money, their banks rules, and whatever they can do to attract people in, depending on the audience that they wanted to acquire.
Yeah, and I mean, it sounds like, because I want to make sure that the audience listening in, is completely, on the same page as us. Like, don't expect that, oh, just because you have Anthony on your side, you could just, flip a switch and get funded. Like, from what you're sharing, you have the ability to do so, but it's got to be a bit of a two-way street. Like, you got to have some substance and depth to bring to the table as well, right? You got to have some kind of revenue, right? Where you can demonstrate that your business is a business, right? I mean, even the PNC example, like 3 months worth of financials, between 20 to 25K, right? And then on top of that, you have to have the 4 pillars. If my memory serves me right, the personal credit pillar, the corporate compliance pillar, the business credit pillar, and then again, financial statements pillar, right? So it's not like you can just open an LLC and be like, yep, all right, Anthony, I got an LLC. Can I get 100K, right? So there's
It's still
definitely
possible. Don't get me wrong, my friend, right? It's still possible.
mm,
Like your recipe as a startup, we can tap into 0% business credit cards.
right.
The strength of your personal credit can get you, like we just got somebody a $75,000 Chase Business Inc., 0% for, 12 or 18 months or whatever it was. I think it was 12 months.
They're usually 12 months. Yeah.
Right. And so, but, once you hit 2 years in business,
Mm-hmm.
the banks look at you different. Right. They look at you different, that you're not in a startup phase. Even if you had zero revenue, the fact that you have their age for at least 2 years makes such a huge impact
Mm-hmm.
into how a bank looks at you, right? Just the perception from the front end of how they're going to look at you as far as
Right.
your goals,
Right.
from that.
Gotcha.
So all these different factors, I know I'm going very high level, from all this, but if I had to give you some advice is look at your profile in 4 pillars and look at your strengths and your weaknesses.
Mm.
And you want to find certain banks that are going to play with your strengths, and then have a story developed of your weaknesses of what happened.
Right.
One of the things I always teach is like, okay, well, hey, I've, underwriter, I've been in business for 2 years doing this revenue. I have a contract that is going to give me a 25% increase in my income, in my revenue. And so, I know that there's one blemish on my credit report that happened because my bookkeeper, missed the payment. It wasn't my fault. So you can
Right.
see the history of my credit report is very strong.
Mm-hmm.
Credit scores are still good, but you can see the revenue is this. So look, I'm just playing on the story of your profile and playing on, and then providing an explanation of the weaknesses. Right. And so when you look at your financials, at the topic of this podcast, what are your strengths? Right? Do you have revenue? You don't have revenue. And so if you need $200,000 and the bank's going to give you, let's just say 50, well, I'm going to go to 4 different banks and get you approved for that, so that's 200, because that's what you need to help you grow, your company there.
Right. No, absolutely. And it sounds to me like that's why, the personal credit has to be pillar one as well. Because let's say if you don't have an established business credit, you can leverage the personal credit, right, as a jumpstart, correct?
Yeah. Yeah. And let me just give you some few tips, right? If you find a bank that is able to take your bank statements, and that's, they're going to give you, unsecured 50,000, 100,000, whatever number is. Number one, here's a few things how an underwriter at a bank will look at you. So make sure you have multiple deposits from different sources flowing through. Okay, so the little thing I teach is if you have, $50,000 a month in income from one client, what's going to happen if you lose that client, right? You're out of business. So you should have a minimum of about 6 deposits from different companies, different sources to substantiate your income. If you lose one, you still got, 5 other ones, right? That's
Right.
kind of number one. Have as much deposits flowing through your account as possible, because they're going to annualize the number of deposits. Let's just say it's 100,000 per month. You do 100,000 one month, 100,000, 100,000. That's projected to be a $1.2 million in revenue, right? So they'll give you essentially 120,000 based upon your 3 months of annual outputs. If your net income of your ending balance and beginning balance is low, hey, if you're able to pay a vendor instead of on the 31st or the 30th of the month, you could pay him on the 1st or the 2nd, leaving your ending balance a little bit stronger. Then that the perception of your bank statements looking better is going to be on the statements, right? They're going to go off the statements.
Yep.
So if you have a little extra cash as well, let it sit there, right? The average ledger, right, of the balance can make you look stronger. So little key points like this can really look at certain things of a approval or denial, right? And just, even though you want to play with the perception of what's going on.
Absolutely. Thank you so much, Anthony, for covering these things, in a comprehensive yet simple way, right? In order for the audience to really get the best benefit from your knowledge, right? What do you suggest is the best next step for them to get in touch with you and learn more so that, things don't, maybe they heard a podcast here, they heard a podcast there, but then that way, they can keep everything more organized, in a structured manner, right? Like, what do you suggest is the best way for them to get some information?
Yeah, you can reach us at, delivercapital.com. You can talk to me directly on Instagram or YouTube. Instagram is Anthony Vanaki, TikTok is Anthony Vanaki, and then YouTube is Deliver Capital, and also Facebook. So be happy to have a one-on-one just to be able to go through. I know this whole daunting aspect of your credit, your financials, what works, what doesn't, who am I approved with? It can get very complicated, right? For somebody who's been doing it for 20 years, I can just have a simple conversation and say, this is what we can do. So just book an appointment with me, and I'll be happy to see what we can do to help you.
And is there any obligation, when they book this one-on-one with you?
You don't have to pay to talk with us, right? If we can help you and we can add value, then we can have an arrangement of having us take over and doing the work. We do about 90% of the work for our clients. We have the bankers, we have the relationships, we know where to go. That's why the clients come with us. We funded over $100 million of business loans. I think we know a thing or two on how to do this.
Just a thing or two, probably, right? But hey, man, that's why I love having you on. It's always a great time. Thank you so much for your generous offer. And again, if you're listening, go check out delivercapital.com, have a conversation complimentary of Lightspeed Investing. Just mention this podcast, and I'm sure Anthony and his team will take great care of you. Anthony, do you have any concluding remarks, comments, for the audience before we close it out officially here on this episode?
My dad always says, is that if there is a will, there is a way, right? And there's literally, in my opinion, we've helped people with bad credit to get back to health. We've taken files from literally nothing and gotten hundreds of thousands of dollars. There's always a will, right? If there's a will, there is a way. Just being able to have the right team, the right resources and access, and the right intelligence to be able to get you to that next level, because we have opportunity costs that we need to account, right? You're either going to pay for it with time or you're going to pay with it with money.
Right.
So the faster that we can get access to capital, the faster we're able to hit our goals with our business.
Absolutely.
Financial freedom. So that's what I love.
It's a lot easier to accomplish your goals and dreams if you had wealth on your side, right, Anthony?
Name of the game.
Yep. All right, man. Hey, blessed to have you here again. Looking forward to our next conversation. Until the next time, this is Lightspeed Investing Podcast with Anthony, CEO of Deliver Capital. And I hope all of you have a blessed day.
There, guys.